all candlestick patterns and then all chart patterns. And that's two different things, right? The chart patterns are going to find wedges, head and shoulders, cup and handles, that sort of things. The quote other or all patterns is going to be more specific about the kind of patterns. So I've got, abandoned baby and doji, engulfing, but you could add, I don't see inside. I mean, engulfing would be your outside bar. If you can find another name for an inside bar. Oh, that would be a harami, right? A harami would be an inside bar, and then your engulfing would be your outside bar. You know what I mean? So there you go. This one's called all patterns, all candlestick patterns if you want to search for it. And probably the same thing on Thinkorswim. You could just search engulfing and harami. Yep. You got to think outside the box, right? Because what we call something, somebody else might call something else. And then, you're really talking about the same thing. You're just using a different name. I have found that candle, one-time candle framing, OCR, is really good for all kinds of trading. It doesn't matter if you're swing trading, day trading, if you're scalping, 30-second chart, 10-minute chart, 2-month chart, it doesn't matter. They're useful on all time frames, which is really cool. There's not a lot that I can say that. But with candle patterns, yeah. And the best ones for me are the reversal style patterns. Evening stars, morning stars, hammer, hangman. Those are my biggies. Big Pinocchio bars or big reversal bars. Yeah, I'm sure somebody's got wood. What has been going on with Riot lately? It came back up from sub $1 levels, and since 2020 has really been stuck inside this large range, but it's trying to test that breakout. Put it on a weekly here, and at $20 is still boss. Nice reversal off of the lows. That $12 low has been just absolutely beautiful. Couple of earnings have gone by, and while it kind of fell out of bed back here last year, since then we've retested those lows and we managed to not crash and burn. Run the mid, we're back above 18, so that's our line in the sand. We want to stay above that. And you're looking for puts. So this is what I've got for Riot. The stock is trading around 1863, showing a massive jump recently, up over 30% from its monthly lows in early April. It has outpaced many other miners, largely because it's seen as a quality play with a massive Bitcoin treasury. They recently released its production update, and the numbers show a company focused on efficiency over raw volume. They produced 1,473 Bitcoins, because it's a Bitcoin miner, which is a 4% dip year over year. So they're a little off compared to what they normally produce. But they sold. They've been aggressive sellers, offloading 3,700 Bitcoin this quarter at an average price of $76,600 per coin. That brought in around 290 million in cash. But they still hold 15,600 Bitcoin. They're they earn power credits. They get paid to not mine. So they have a power efficiency. Their all-in power cost dropped to $3 per kilowatt, and they earned 3 cents per kilowatt, and they earned 21 million in power credits just by turning off their machines during peak demand. That's Texas. Absolutely. Farmers are still not paid to not produce. My grandma was getting paid. She was too old to farm, right? My grandpa had died. My grandma was alone. And the government was paying her to not farm on property she couldn't farm even if she wanted to. The biggest buzz around Riot is the activist investor pressure from Starboard pushing Riot to use its power capacity for AI and high performance computing hosting. They just signed a 10-year agreement with AMD. Investors are looking to see if Riot will follow the path of the other miners like Core Scientific or IREN by pivoting some of their data centers towards AI to diversify away from the volatility of Bitcoin. I think so. Analysts are expecting a loss of about 33 cents a share, but the market will be focused on their revenue, which is expected to come in at 128 million, and any updates on their 100 EHSs by 2027 harsh rate goal. I think that's their energy. It's an energy measure or a hash rate goal. Yeah, hash rate. 42.5 is their hash rate right now. If you believe Bitcoin is heading towards 100K, Riot is often used as a leveraged way to play that move. But if they take the AI pivot, it might start decoupling from Bitcoin and trading more like a data center stock. And it has earnings next week. Sounds right. They are heavy-handed in their out-of-the-money put buying, and it is put buying. 47% of the puts traded today were bought at the ask and above, and they are running at a 0 to 20 delta. That's out-of-the-money aggressive put buying. 0 to 20, that's the metric I use. I mean, I can adjust it, but I use that. I break them all into 20s. I think it's just the easy quadrant to divide things into. Yeah, but I mean, that's where they are buying, one, and two, they are far out of the money. Now, 20 delta is not that bad. There's a lot of trade strategies that use something like a 20 delta, but I use 0 to 20 delta as the box that I'm measuring. So it could be 20, it could be 19. You know, until we go in and look, we're not quite sure. We just know that they're far out of the money. And with a flow tool like you're looking at, you can specifically target where they're at. I've got the May 15 puts, 1,688 of them bought at the ask, and that was an 11 delta. Yeah, it was kind of earlier today, and then another 1,100 came in later, but that was at a 32 delta. Yeah, that was the 17 put, and that was also hit on the ask, so they were aggressively buying that too. So today I started working on a list of um, qualifications, I suppose is a good way to say it, because I continue to have this conversation with people where I talk about how it's kind of a bad time to be swing trading. And nobody wants to hear that, right? And I get it. None of us learned to trade to sit out. And so we want to trade. We want to trade something. And the good thing is you can trade so many things, but you have to be able to articulate where's risk at right now, and am I willing to take it or not. Of course, all trades have a chance of losing, but during some market conditions, your chances of losing go a lot higher. And it can be a good name with a good setup in a good space, and then some macro headline knocks the entire market to its knees, and it had nothing to do with your stock or your trade, but you get punished at anyways. And that's where we have to decouple ourselves from being able to spot all of these trade ideas and then still say, I don't like the amount of risk I have to take to put that trade on, so I don't want it. It's a lower probability trade simply because the entire broader market is going to suffer if a headline comes out. And that's not usually the case, guys. If you're not used to trading and you don't know this, normally the market will move from sector to sector to sector, and it'll just rotate around. Banks will get whacked, so we go to staples. Staples get whacked, and we go back to banks. And technology's normally the big dog, but then we rotate in there between chips and communications, and we just keep rotating money around. But in some market backdrops, everything goes. Everything's up, everything's down, and no matter what you pick, anything can get whacked at any moment from a headline. And that's the kind of environment we're in. So there are tools that you can use. There's regimes that you can pay attention to. And then there's still identifiable ways to spot opportunity, right? So correlation and a stock picker's market is something I thought we could talk about for a little bit. I don't know if you guys have ever heard that phrase, that it's a stock picker's market. Sometimes it is, and sometimes it's not. When we're in a stock picker's market, we have a low correlation. And the idea behind that is every damn thing out there shouldn't be up or shouldn't be down, that you'll have these pockets of things that are doing good or doing bad. So technology, kind of like what I was discussing, that's a low correlation in market. Now, that doesn't mean that you can't have entire sectors doing good. And of course, in that sector, we'd have a high correlation. So Ford, GM, right, all the automobile stocks, they can all run as a group, or all of your casino names or pot stocks. Those as an industry or as a group can be highly correlated and move collectively. And that makes trading them easier because we can watch all of them and look for any sign of weakness to get out of longs and bail out and try to rotate into some other thing. We can buy the dip. We can follow themes and trust that our analysis is good and that it's carrying us along. But we're not in that market. We're in a high correlation across nearly all markets. And the only thing that we really have right now is AI as a solid theme. Everything else is failing. And so every single headline that comes out is just whiplashing us like crazy. So correlation. There's correlation indicators out there. You can get things that I've shown on TradingView where we can look at high correlation and coefficients. To me, those are just big words that confuse people. So you can look at them, but you don't need them. You can focus on other things like the stuff that I've mentioned before. Do we have forward guidance from the Fed? When we do have guidance, even if it says, hey, we're going to hike for the next 5 meetings, the market won't like it, but they'll price it in and they'll move on. That's it. They're done. They don't care. If they have guidance, they're good. They can now start making money. But we don't have that. We have, well, we don't know. We're probably not going to raise rates, and we're probably not going to cut rates, but we'll let you know at the next meeting. We're totally data dependent right now. So the market has absolutely no forward guidance from the Fed. And that's really big. Without that forward guidance, nobody wants to commit to a 3-month plan. They'll commit to the next FOMC, which is, again, leaving us sitting out and them saying, oh, I don't know, we're going to have to stay data dependent. So no forward guidance from the Fed. We can monitor things like credit spreads, the interest rate credit spreads and treasury yields, and see if those spreads are rising or not. Right? Well, we've looked at this chart before. I've shown you guys, talked to you about it. When it's going up, it's bad for the market, right? There's less liquidity out there. This is April of last year when the S&P was down really bad, the tariff terrors and all of that stuff. See how high credit spreads got? They were really bad. And even just recently, from the lows where we were, we had a little rise to the upside and the S&P was going down, NASDAQ was going down. So we can use that as a gauge. Is it a good time to be trading? What's interest rates doing? Or what's the high yield index option adjusted spreads doing right now? They're kind of flat at the moment, but they are pointed down, and they've been falling for a little while now, so that's helping us out. That is the S&P rally that everybody hated. There's the March 31st flip, and the S&P rallied, and this fell. So you kind of get the idea of what it would look like, right? We want this to stay low, or at least not run, kind of keep pointing itself to the downside. There are tools like this and a lot of things like this that are out there. I don't even have a comprehensive list. I've just got some things on my list. But every one of these are things that you can explore, study, research, dig into deeper. There's books, webinars, videos. Learn about this stuff if you want to be a swing trader so that you can better analyze the backdrop of the market and ask, is it a good time to be putting on random swing trades in, just any stock that I happen to like? Or should I maybe focus on sectors and ETFs? In the market we're in, sectors and ETFs are the better choice. They will still lose if things go bad. Trust me, they will. But that's one way to go. And then finding opportunities that are low risk, like that list that I was looking at, right? This cheapies list. These are trades that would probably lose if we was to buy every one of them on the list. Most of them are low risk, low probability, probably a 95 chance of losing or higher. Yeah. I was looking at this Tesla one down here, but it was 800 strike calls. That thing is literally so far out of the money. It's the last strike showing. Tesla, for anybody who doesn't know, is not even at $400, and they think it's going to go to 800 by next Friday. It's not happening, right? It's not. But it can say, it got me thinking, well, what could I trade in Tesla for next Friday using the same side, the call side, right? So if you're looking at Fortnite, then what could you trade in that same table for the same expiration that could also be really cheap, right? Because if you found one really cheap trade, it's very likely you'll find others. That's the idea behind a list like that you don't necessarily have to trade whatever you found. But if somebody paid, what's that? 7 times 3 is 21. Somebody paid $21,000 for a Fortnite trade for May 1st. I mean, that seems like a little bit of money to me. But they bought puts. So if you're bullish, you might want to reevaluate. So there's a lot of ways to trade. We want to gauge our risk and just ask if it's worth it. I find that a lot of new traders are hung up on winning and losing, and I get it. It seems like that's what the goal is, but it's not. This isn't sports. I am not keeping score. I don't care about wins and loss, winning and losing. I care about how much I'm going to win money wise versus how much I have to risk money wise. So I don't focus very much on the win versus loss ratio. You are never going to get a high win rate and be able to trade all the time. You can't, because having a really good high probability trade doesn't come around all day, every day. So if you're selective and you're being patient and you're hunting for those really good opportunities, there will be a space between them. It's the way it works. But what I find is people want to constantly trade every day on the hunt. Where's my wow trade today? There's got to be a wow trade here somewhere today. Where is it? I just have to find it. It's here. And 99% of the time, that's not true. So I don't chase the high probability, high win rate. It's not going to lose themes or ideas, because there's no such thing, and I don't I got tired of wasting my time on that years ago. But how many of us hunt for that, either as a strategy, a setup, a trade, an idea, a theory, always looking for some high probability way to take a trade and not lose, not lose, not lose, not lose. I know I used to. I don't anymore. Let's see these Fortnite options. Oh, nice. 30,000-ish, kind of rounding there a little bit. We are well above the 5-day average options volume. They are hitting between the market. That's not really all that wow now. So these are spreads, very likely, or they are rolls or something like that, because they're hitting between the bid and the ask. It doesn't mean they're worthless. It's just you kind of lose my excitement when I find that they're not aggressively hitting at the ask or the bid. And they're way out of the money, which is by itself not a the end of the conversation. But 70% of all of the trades on the put side today were 20 and below delta. Quite a bit out there. So the idea that we can still trade, there are a lot of things that you can do. One of the things that you can do is filter the list of things that you are interested in trading into different price groups, right? Like I often talk about XLF. There's nothing overly amazing about XLF, right? It's just a cheaper stock, well, ETF, and it has reasonably decent options, right? Marlon, that's a good question. If you're trading in the overnight session, hands down, it's going to be digital currency and FX markets and futures. Now, out of those three, I trust futures the most. I don't know that everybody wants to pay the data to trade gold, copper, silver. So if you're just starting out and you're not profitable yet, and you don't want to spend money on all of the data out there, then you could just trade the ES, the MES, the NQ, the MNQ. That's what I did when I first started. And I trade in the overnight on those futures with no problem whatsoever. But here's the rub. In the futures, we don't really get an amazing amount of movement overnight. In fact, this week is a really good example of overnights that are kind of boring, right? So even though I love the ES as my day trade vehicle, when I'm trading in the overnight, I do use the NQ, right? I do. And that's because the NQ moves enough in the overnight that I've got plenty of room to get paid. So that's the vehicle that I use, and I've used it after hours. I've used it pre-market. It works just fine. Now, what I've recommended to a lot of people who want to trade at night, listen to Bloomberg. Seriously, they have Bloomberg Asia, right? They will give you the mood of the market. Are they bullish? Are they bearish? Do they have any headlines or news? They're going to have earnings, interest rate meetings. They're going to, discuss prime ministers, and they'll have people talking. Get a feel for what the heck is going on so that you don't just suddenly have the clock turn to 8 o'clock and boom, price drops on your head and you don't know why. Make sure you're listening to Bloomberg Asia, or some news from the region so that you have current regional news while you're trading at night. I have an XM, Sirius XM account, so I used to listen to Bloomberg Asia on that. But nowadays, you can get it from their free YouTube. You can get it from brokers like Fidelity, and there's even websites that are streaming Bloomberg Live that you don't have to pay for. So get it wherever you can get it. But if you want to trade at night, that's one of the biggest things that I could offer is be aware of the local news and listen to it so that you're not standing in a room with a blindfold where everybody can see you and you can't see them. Another thing about trading at night is a lot of the tools that we use intraday work at night. So a 5-minute open range, that works. Mark that first bar. Mark where we opened. That first bar's high, low, and open are really important for the rest of the Globex session. 2, if we have a gap like we did last night, mark that gap. All the tools that we use drawing wise, like the 5-minute open range breakout, the Globex high, Globex low, yesterday's high, yesterday's low, yesterday's mid, all of those are effective in the Globex. Use them. They're really insightful. They will add to what you're working on. Unfortunately, we don't have, well, depending on who you're charting with, you won't have today's ADR last night or in the overnight, but you'll have yesterday's ADR still on the chart. Use them. Same with the pivot points. If your broker doesn't give you the new Globex pivot point for the new day, just use what you have from yesterday. Carry it forward until you get the new ones. There is a kill zone. That's what it's called. I didn't name it. That happens from 2 a.m. to 4 a.m. Now, we don't have it here, and we really haven't seen it this week, but a lot of times, my trades, I start at around 4 a.m. ish. A lot of times, I come in and I trade the reversal of the kill zone. So between 2 and 4, we'll get like a big move up, something that looks kind of like that big move right there. And then I'll come in at 4 o'clock and we'll retrace that big move, or at least a good part of it. And that's usually what I end up trading. Not always, like today, well, this week, we haven't really had much of a kill zone, but there was still a trade. So, get what I can get. So use your pivot points, man-made or otherwise, and the ADRs, floor pivots, SNRs, local news, and your open ranges, and that's a hell of a lot to work with right there. It's a lot more power than not having any of those. I do, but maybe not what you're thinking. So if you think about basketball, if you are running down the court and you turn and go the other way, you pivoted. And so in that context, I use pivots all the time. Yesterday's low, yesterday's high, today's low, today's high, those are pivots. Any place where I can look left and find that price turned and pivoted is a pivot. And I love pivots, but I like my pivots. Now, if you're asking, do I use like the standard floor pivots? I use them every morning in the morning briefing to mark out zones and levels. This is the chart that I use, right? And I usually bring up like the SNR lines. Those are all considered the classic floor pivot. They have context, they have value. If we fall from the highs and we're headed to the downside like yesterday, where are we going? To that floor pivot. If we break that pivot and we keep going, where are we going? To the weekly pivot. Yes, sir. What I just drew on my screen is 5 numbers, 3 plus 3 plus 4 plus 3 plus 3. It's important that we know that I have 5 numbers there. To get an average of a number or a group of numbers, you need to add all of those numbers together. If I add these, I'm going to get 16. And then you divide that number by how many numbers you had. And I had 5 numbers. And if we take 16 divided by 5, we end up with 3.2 as an average. The reason I explained how to get an average is because this floor pivot is using yesterday's high, yesterday's low, and yesterday's close. 3 numbers. So they take the high plus the low plus the close and they divide it by 3 and it gives them this number. That's very arbitrary. Now, having that number, if we're above it, we're considered bullish, and if we're below it, we're considered bearish. But if we're above it and still inside of yesterday's range, well, we're not that bullish. If we're below it, but we're still inside of yesterday's range, well, we're not that bearish. So it gives us a little bit of context, and those floor traders that he was just talking about were able to do that on a napkin because calculating an average is a very easy thing, right? It's math and division. We all learned that by the 3rd grade, and it's an off-the-cuff thing they could all agree on and they could all do it. Over the years, it's stuck, and then people wanted to add more lines like R1, R2, R3, S1, S2, S3. And sure, those have merit too. And we can calculate that floor for anything, a weekly floor, daily floor, hourly floor, even a 5-minute floor if you want one. You can calculate that number on anything that you want. So do they have merit? The cool thing is you can put them on your chart and you can go back and find so many examples where they shut price down or price really responded after it got back above one of those levels. And that's really where I like to use them. And in the morning briefing, I will give out levels and say, okay, if we get above this, we're going to that target, and that target. Now, I don't know if we're actually going to reach it or not, but I know that that's the next destination. And I am personally, I consider myself a pivot point trader, but not those floor pivots, right? I use my pivots, not those pivots. But I am, in my head, I am a pivot point trader. I really love pivot points, just not that floor pivot, right? Point of control on a volume profile, hey, that's a pivot. Value area high, value area low on a volume profile, yep, that's a pivot too. Anything, yeah, 111 pivot, halfback pivot. All of those are pivots. You'd have to define it to me, but I'm going to say probably yes. How do you define a quant pivot? Well, that's really interesting, Ben, because I haven't heard the term. Yeah, that's very true. They could have just put some fancy words together to get people to sign up, wondering, gee, I wonder what that is. The idea in my head is that quadrant, or excuse me, that quad pivot or quant is probably going to use some quant traders levels. So if we think, well, what are quants? Quants are the guys that go out and gather a bunch of data, right? And then they correlate all of that data together. And if he can correlate something like oh, GEX levels, dealer positioning, or maybe CTA positioning, something that where it's a collection of data and then the data turns. I would even consider volume profiles to be quadrant or not quadrant, quant data because it's gathering all of those trades and showing us floor pivots and value areas. Those could be considered quant pivots. But hey, at the bare minimum, you might learn a new turning point to watch for, and that's a bonus. Yeah. Now I'm a nerd, so I love that stuff, right? I eat that stuff for breakfast all day long. I can't help myself. Uh, some people just get to a point where they're like, I'm good. I don't need to muddy the water or learn anything new. And there's nothing wrong with that either. You'll stop when you've had enough, right? And I don't know what anybody's stopping point is. I haven't reached mine yet. Yep. That's why you'd never hear me really use those terms because they're so vague and arbitrary. And I've heard so many different um, levels of description for what somebody says they are versus somebody else. So instead, what I focus on, if we think about supply and demand, is just where are the traders? If somebody got short at the high of day, where did they put their stops? Up here. Now you can say I'm using supply demand dynamics, and I wouldn't argue with you at all, but you won't hear me say that that's supply or demand up there, right? It's just the logic of if somebody got short up here, where'd they put their stop? Up there. And if somebody got long right down here on that options level, what did they do with their stop? It went down here. Supply and demand, sure, fine, call it that. But I know there's liquidity down here, and I know that there's liquidity up here, or at least I suspect, and I'm going to roll with that until proven otherwise. And if you, And that's the thing. Everybody's gonna have their own approach, and that's the bad part, right? Is you're gonna have to look inside of what each one of those people are showing you and really ask, what are you talking about? Trade orders. But there's also what we call footprint charts, and that's Jim Dalton, or at least he's one of the biggest names in that space. And those footprint charts show supply and demand as well. Whether or not they'll call it supply and demand any more than I'll call my stuff supply and demand, probably not. But it is the same thing. Bring up a footprint chart, bring up a volume profile. You're just trying to answer the question, where was liquidity? That's the past tense, like volume that was traded. And where are people now in the queue? And that's forward looking at areas on the dome or bookmap jigsaw that are showing where their orders are positioned within the queue. That's forward looking. So you got both sides. Where are they hiding in the future? And where did they already trade in the past? And you don't need fancy tools or fancy scientific manuals. You can just start honestly asking the chart in front of you, the candles, where is the trades? I can open any candle and show you where the volume was. Here's a volume profile. So I can see where was this volume. And if I turn on the TPO chart, we can see, was that buying volume? Was it selling volume? Was it a mix of buy and sell? By how much? What was the ratio? Did they hit at the bid and above, at the ask and above, at the bid and below? We can define this old volume with a lot of tools, but where was that volume? Check. I can do that a million different ways. And then now, what is ahead? What's in the queue? Well, the queue is the queue, so there's only one way to look at it. Bring up the dome, the active trader, and see those positions. And all of us have that data in the dome. If you pay for it, you get more of it. If you don't, you got one strike, right? That kind of sucks, but one strike up, one strike down, you can see ahead. Level two. What I did? Yeah, yeah. Uh, oh, I got you. Let me jump back there. It was here. Absorption. And a lot of people have specific styles that they like to use and specific words that they like to use. I have really tried to avoid the whole supply and demand thing because I found that it really confuses people. So I use phrases like unfinished business, liquidity areas. I just used absorption. I'm willing to say that. There was a lot of trades that I talked about this morning, how we ran up here and it was just buyers who got exhausted. Look at the profile. We didn't run into any real liquidity there. We just dried up. Buyers got tired and we fell back down. But look at this one. As we were going into the close, there was a bunch of sellers sitting up there and we ran into those sellers and we absorbed what they had to sell. The next group moved their stops higher or their sell orders. So we had to go higher than that previous group and get into the next group. And we could see that there was sellers there as well, right? So we got various ways to do this. Friday, we ran up, we ran into a bunch of sellers, fell back down. But look at how those looked compared to Monday. No sellers there. Buyers got exhausted. Tuesday, no sellers there. Buyers got exhausted. So we can use different terms, different language, but we want to try to just rationalize, hey, what are we talking about? Trading orders in the past. Perfect. Okay, from those trading orders, what can I do with it? I can look where there was sell orders, where there wasn't sell orders. How did the candle close? What kind of wick did we get? I can look at the bid and the ask and bring up various tools, applications, programs, and better analyze that volume from the past. It's the entire day. It's the entire day. This is 23 hours of trading that is being recorded there. It just started at midnight to have a place to put that volume, but it's using the entire 23 hours of trading. Here's another 23 hours of trading, and then there's another 23 hours of trading. Just because it's sitting in the Globex is because it had to put it somewhere, right? But look, the drawing goes all the way to the end of the day. It's using all of the data in that 23-hour day. Exactly. You're 100% right. There was not a lot of trading, and those trades happened in Globex. But these green histogram bars are going to read all of that day's trading. Since in the regular trading hours, we never got that high again, we know that that was only Globex. You're 100% right. And this, where there was trading activity, that did happen in RTH. It did. Sellers got exhausted. But we didn't see any buying coming in because if we had saw buying coming in, it would have been a larger footprint. It would have looked like this, but down there, right? But we didn't see that. So we didn't have buyers aggressively buying it back up. We just had sellers that got exhausted and quit selling. Because we closed back up here. Let me zoom in. We closed up there. Is the floor. Yeah, going that way. Yeah, I'm pointing to the left. Yeah, this one. Yeah, this one. That's why I was pointing that way. I was just saying it's to the left. It's to the left. I just doesn't have it zoomed in anymore. Yeah, I always use that gas station analogy here, right? If you drive by your gas station every day, every day, every day, and gas is $3, and then one day you drive by and it's $5, even if you need gas, you're going to say, screw that, I'm not stopping here. I'll get gas somewhere else. Even if you need it, you won't stop because you know that gas ain't worth $5. It's $3 every day. But if you drive by and it's $1.50 or $2, even if you don't need gas, you're probably going to stop in and get some because, damn, I mean, it's usually $3. I'm definitely going to get it at $1.50, even if you don't need it. But that had nothing to do with yesterday's low. Yesterday's low was not where we ended the day. We ended the day back where everybody was happy. It's in the middle. Buyers and sellers, a balanced market. We ended there. And from there, we had buyer pick it up. Yep. You're reading all of that correctly. No one's arguing with you. But you can't put bias into it and say, well, it must have had buyers or it was bullish because it never was, right? Sellers got exhausted. It buoyed back to mid, and from the mid we closed in Globex the next night. It meandered higher either because crude fell or VIX fell, because that can move us higher without seeing a bunch of buyers here. So the price meandered higher, forced grind, and by the end of the day, when we tally up all the numbers, the bulk of all the trading was there at the new point of control, which is yet again a balanced market. We were not imbalanced, or we would have moved. No one's arguing that you're wrong. You just analyzed it correctly. You don't want to use those phrases of price will, price won't. It's what happened, because you're looking at in the past, and then you can use that for your forward future. But at the time, all you can say is what price did. We had the most amount of trading right here. That's your balanced market, because that's your point of control. We had a large amount of trading up here, and that wasn't from this, because it's higher than that. Not by a lot, but it's higher than that. So we had a peak here, we ran into sellers. We had a peak here, we ran into sellers, and then we had some trading activity here, likely a bunch of sellers. We don't know until we use a different tool, but there was a lot of trading here. We know that for a fact because it's a high volume node. Lots of trading happened there. But until you're ready to take a trade and try to anticipate what could I expect because of these high volume nodes, don't think about, well, price will or price won't, price should. It's just, what do you have? Read what you have, and you're doing really good reading it. These are high volume zones. You're reading that correct. But yeah, a big news bar. if we used if we used some kind of market go back, like if I went on the trading view and applied my volume profile, I could see, when did this big footprint show up? Did this one bar cause all that? Or was it these two bars combined that did that? Or was it later in the day when all of this trading took place that we finally got all of this volume? Until I go back in the past and replay it, I don't know when that volume actually showed up. If it was there by the time we got there on that afternoon, when we started falling, that became a destination. Like, where are we going? To that high volume node. Oh, well, what are we going to do when we get there? No freaking clue, because it's not giving us any indications of what price will do once we get there. It's just saying, hey, where are we going? We're leaving the highs, guys. We're heading down. Okay, where are we going? To that high volume node. And then what? Drink a coffee and wait to see what happens next. No bias of bullishness or bearishness, just where are we going? To that high volume node. You We may is the key word. So when we started rising up on Wednesday, or excuse me, on Thursday, we could have said when the market was rising, if we keep rising, we're likely going to go to that Friday high where there was a big node of footprint up there. And we did. We ran right up to that spot and we rejected on Thursday and we started to fall. So we knew it was a destination. We could use it as a target. But what happens when we get there? We don't know. So we can say it might fall when we get there. It might punch through and keep going. We don't know, but we can use it for a target. When we did get there, it did reject. We began to fall. Yay, it worked. But we can't stamp that and say it's always going to work or that that's a high probability reversal zone because it's not. It had already been tested multiple times. We don't know how much liquidity was left up there. We could have got up there and ran right through it like it wasn't even there at all because it had already been tested. I marked it out Tuesday. We had already been there. So on Thursday when we got there, it could have been gone at that point. We don't know for sure. So we want to temper our expectations and say it's a high probability target. We can aim for it, but who knows what's going to happen when we get there. And then and at the end of the day, it is your money. So when you do want to get aggressive, right? Because there's somebody willing to take the other side. I won't get aggressive just because of that high volume node from 5 days ago that we've tested since then. But I will use it and mark it and say, hey, if we keep going higher, that's an area you need to keep on your screen. Now, the funny thing is, it was on my screen because that was Friday's high. And I have been looking at Friday's high all week. It's been a real big thorn in my side. It was also Monday's high, not to the tick perfect, but the space between Monday's or Tuesday's high and Friday's high is a perfect zone. And I've been watching this entire area all week. So on Thursday, when we ran up into that, I was more than expecting to see some trouble there. But I still wasn't convinced that we would flip and fall just because we reached it. That's why I have 111 and 1236 because when we get to a previous pivot, a lot of times we overshoot them because liquidity is on the other side of the pivot. And if you haven't heard me say that before, I'm sorry. I do need to say it more often. But in my world, liquidity resides on the other side of the pivot. I'm a big believer in that. So if my pivot is Friday's high, liquidity is generally on the other side of that high. Yes, sir. Any pivot, and not a floor pivot. I need to be more specific. Yeah. If I mark a line in the sand, liquidity's on the other side of that line. Yeah, you should be out at that point. You're getting all these signals saying it's not going to continue to go higher. You don't want to stay the hell in it. the thing is, you do the analysis, and trust comes from understanding, right? If I don't understand something, I really don't trust it, and I'll either make bad decisions or, incorrect decisions because of my lack of trust. So you have to build trust in whatever it is that you're doing. And if you are adamant that you see a reversal up here and that would have been a good place to get out, I'm not disagreeing with you. It In hindsight and in theory before it even happened, it was a good place to get out. So if you saw it and you can prove it and you can find other examples where it increases your conviction, use it. Use anything that you can get that you can prove to yourself and that you can validate over and over again. This is a real hard one to grasp too, but you and I speculate. And a large part of the trading that happens in the futures is not from somebody who thinks it's going to go higher or lower. They don't give a damn if it goes higher or lower. They just need that contract and they get it. So their liquidity isn't even aggressive. It isn't even biased towards a long or a short. They just need it and they take it. A lot of it, like over 70% of all of the volume that we're looking at, didn't even have an opinion about, I think it's going to go up or down. So to grow your trust, one of the things that I struggled with is that trust myself, and pictures are my solution. I know everybody's got to have their own, but I use pictures and I use Discord. You can make new Discords, right? They're free. You can just make one, name it whatever you want, take pictures, videos, all kinds of stuff, and throw it in there and then study it, analyze it, gather data really is what it's all about. I'm like a little science nerd just gathering data and data, parse data out. I look for repeat examples of the same thing, and I look for examples that prove me right and examples that show I can be wrong, because I need to know what wrong looks like. I grab them both. So when did it work? When did it fail? And I try to study it as much as possible. Why did it fail? Why did it work? Is there any particular candle pattern inside of that zone or area that made it better, made it worse? What time of day was it? Anything that I can gather from it that gives me more trust. My trust didn't come from trading it personally, and it didn't come from somebody else giving me something, because I don't trust people. Sorry. I have a hard time trusting somebody else's opinion. So I have to trust my own by doing the work. And whatever you can do to grow your trust, I bet it's going to come from your own hands, from you crawling through the charts, or some video is going to steer you in a new direction. Maybe a webinar will get you looking at something you haven't looked at yet, and then you grab it, you mold it, and shape it into something that is yours, and that will grow your trust. That's a good trade. And of course, it won't work all the time, right? Because nothing does. But we can get better at when should I not trade those pullbacks, right? Like I'm a big fan of when should I not do my strategy. For me, it's time frames. I don't trade between 8 and 10 because I know that's just a bad time for my style of trading, and I don't really like to trade from 3 to 4. I don't like that window of time between 11 and 12. Like I got all these areas that I look at it and I'm like, nah, I don't want to trade there. But it's a good setup. Yeah, I don't care. I don't want to. I don't want to do it, and I just leave it alone, right? Because I know it doesn't work for me. So when it's not working, dig into those. Why didn't it work? Was it news? Was it just the time of day? Was it the day of the week? I know that sounds weird, but that's another one. There's all kinds of reasons why some things work better than others at different times of day. Was it at the high? Was it at the low? Did my signal show up in the middle of a range? Figure out when it doesn't work, if there was anything in there that you can learn from. And don't get me wrong, some of my stuff just don't work. Even when it was perfect, it was at the right spot, the right time of day, everything was perfect, and it still didn't work. So what? I mean, nothing works all the time. But I own that, because nothing works all the time. It's okay. Losses happen. They don't reflect on me, right? I'm not stupid. I lose like everybody else loses, and it's just a part of trading. Manage your losses, increase your wins as much as you can, repeat the process as often as possible, and find ways to improve. You got it. No, all good. I think all of us struggle with these. It doesn't have to be volume profiles and liquidity. Everybody is growing, or they wouldn't be here, right? They'd be golfing or something. This is one of my private discords that I built over the years. I wanted to do something on supply demand zones, and this is kind of what I put together. But after I put it together, I was like, yeah, I just don't talk this way. So I absorbed the logic of it. I just, I don't, I don't present. Yeah, this is drop base rally logic, and I drew this by hand to represent a 5 minute candle if I was to break it down into 1 minute bars. So if I have a 5 minute candle giving me a drop base rally pattern and I put it on a tick chart or I put it on a 30-second chart, what would it really look like for a drop base rally? What it looks like in its natural state would look something more akin to this. Here's a rally base drop or a drop base rally. There's my distal line, proximal line. There are those candles right there. Right? So it was my interpretation of, well, what do these look like if we was to open them up and put them into a much smaller time frame. Rally base drop, drop base rally, rally base rally, drop base drop. Same kind of logic, right? It's a big part of the supply and demand that I studied. That was the sort of supply and demand that I dug into. Right. And that's the thing. When you find someone who's showing you something that you can't find anywhere else, you're forced to eat from the hand that's feeding you. Just like my fibs are mine. You can't find that anywhere else unless there's somebody out there teaching my stuff, right? Because it's mine. You couldn't have gone and gotten my 111s from anywhere else on the internet because I made them up. And even though I did make them up, they are fantastic. I love them, but they're mine. So there's no literature on them. You can have them. Yeah, there's so much stuff out there. And when you find unique material from a unique individual, you're pretty much just stuck with them until you can parse it out. You know, that is true. I am working on two books, and I am really hopeful that they will both be published by the end of the year. Right. No, I got you. That is a great book, Secret of a Pivot Boss. It goes into pivots, but it also goes into what kind of trading day do we have? And it talks about these six unique types of trading days and how once you identify what today's day is, you kind of got a roadmap for what to expect for the rest of the day, which is really awesome, right? It's really helpful. I make it akin to playing mahjong, right? Just matching the tiles. If you know that today is supposed to be a rally day, then you can look for the rally opportunities. Or if today's supposed to be a range day, you can look for range day opportunities. Until proven otherwise, you can hold that theme or logic. Of course, news can break it, things can go wrong, it can stop doing one thing and then it can start doing something else. But it's another piece of the puzzle to recognize that our days repeat over and over. It's a great book. It's been around for a long time, and I've shared it in the chat more than once. If you can't find it, I'll dig it up and share it again. It's an older book too. It's been around for a while, so you can find free versions online, PDF. But I've always said if you learn something from a book and it makes you money, do the guy a favor or the gal, whoever wrote it, and later on buy their book. You don't necessarily need to buy it if you're struggling, you're new, but if you make money and you're successful, support the author and buy their book later. I've got two books. One of them is for people who don't want to learn; they just want to be told what to do. I think someone got offended the last time I talked about this, but there's just traders who don't want to know. They don't want to learn. They don't want to rationalize. They just tell me what to do. What chart time frame do I use? What signal am I going to trade? How long am I going to hold it? How big is my stop? Just tell me what to do. And I'm writing a book on that. So I just tell you what to do. You don't get to make decisions. You use the chart time frame I tell you, and you trade the signals that I tell you, and you sit on your hands otherwise. That's one of the books. The other one is about my fibs and quadrants that I use. It always sounds bad when I say it that way, but I'm not trying to make it sound bad. There's just a lot of people who just want to be told what to do. So I want to make money on that. and help them, of course. I do like the helping part, but I do like the money part too. I don't want to do all that work and not get paid. So one thing that is a little hard to rationalize, especially for traders who are still trying to figure out price, is why are we going up or why are we going down if nobody's buying it, right? We were looking at that risk profile chart, and there was no buying pressure down at the bottom, and yet we went up. And it's hard to rationalize why price would go higher if there wasn't somebody buying it. But our markets move for a lot of different reasons. And sometimes they are being influenced because of the VIX or crude or interest rates or something else. And so price is moving because of a correlated market that's moving. And it's not moving because of buyers and sellers within this market at all. I know that I can't explain it down to its nitty gritty, tiniest little pieces to make it make sense. But I don't know why grass is green either, or why there's white spots in the blue sky. But like we can stop at some point and just say, I don't need to dig any deeper. I've got it figured out from here. When we reversed down here on this example that I'm showing, these sellers got exhausted. That's one way to look at it, or that they just couldn't find anybody down here willing to take what they were selling. So sellers ran out of steam, got exhausted, whatever, and we started moving back up. And if we look at the highs at where there was that liquidity from last Friday, every time we got up into that range, we absorbed some of this liquidity. Now, I've used the pizza box example. I like that one. It's easy to think about. I like pizza. But if we had all of these trades from last Friday sitting up there, and on Tuesday we went up and we absorbed some of it, then there was less there on Thursday when we went up and we took more. On Friday, we ran completely through it. And this is really important because it was the first time we did that. When we hit it and deflect, we didn't make it through. So there's still something there, because if you hit a wall and you didn't make it through the other side, then there's still something left to hit. But we made it all the way through that time. Even if we did fall afterwards, we made it through. And sure enough, the next time we went up there, we ran right through it. We still stalled out though, because there's still something else up here. And look, there's no large volume footprint at the very top. Buyers got exhausted. But we did run through this zone from last Friday on this Friday, and then we cut completely through it, and now we're holding above it. And we're making a new zone that we're going to have to deal with next week. Right. Now, what we have now is this whole new zone, and that old stuff is done because we've completely passed through it. So we no longer need Friday's level or Monday, Tuesday, Wednesday. We could use yesterday's level if we start to fall. Yesterday now has very valuable information for us, but nothing else behind Thursday is any good to us now. It's all dead. So I have no interest in any of that. Only Thursday and now today's price action. Yes, 100%. A 111 or a 1236. Yes, I think we are. I didn't put it on here, but if I snapped yesterday's high and low, I missed that high, but I'll fix it. If we snap that, then we're not quite at the 1236, but we are higher than the 111. It looks like. We can also evaluate the candles we've had this afternoon in that high. I just snapped a volume profile up there and we can see the point of control, the value area, and we can better examine that high of day and these three other wicks that tried to get back up to the high of day. We can examine all of that old volume with a lot of tools, bid ask, delta, footprint charts, volume profiles. We can look at that volume and look at the cumulative delta down here and really dig into, hey, what were you guys doing back there? So that on Monday, we could have a plan for what am I going to do if we go back up here? Or maybe we open above it on Monday and we fall. What am I going to do if price falls into this on Monday? Yeah. So on Thinkorswim, we have what is called a TPO chart. If you Google TPO charts or you look for a TPO chart on anything other than Thinkorswim, you're going to get this A, B, C, D profile, and every letter is a 30-minute block, and it looks nothing like this, right? But Thinkorswim gave us these, and this is a time, price, opportunity, TPO. It looks very similar to a volume profile. The difference is it's not how much volume took place at that price, it's how many trades took place at that price, right? It might be one trade with 50 contracts. So volume will be 50. How many trades? One. They look very similar. Always, not just in the, always, right? Where it dips is a lack of volume and a lack of trades. So the volume profile is the green one. The TPO profile is the blue one. TPO is asking how many trades took place. The volume is saying how much volume took place. And you can set them side by side on Thinkorswim. If I go to any other platform, however, and I try to look at a TPO chart, it's going to look completely different. On Thinkorswim, a TPO chart that we would call on TradingView, we would call it here a monkey bar chart, and it is preset to a 30-minute time frame, and each 30 minutes is blocked out by a letter A, B, C, D, and that's how it's done, right? So it's only a TPO chart on Thinkorswim. Anywhere else, it would just be considered a trade chart or a volume profile adjusted chart. That I don't know what they would call it anywhere else, really, but it's a. I had one saved. I was going to bring up, so I was looking for the one that I know I have. I just don't find the darn thing. If someone wants to make their own, just go to chart styles and come up here to standard, and you can go to monkey bars or expanded monkey bars. But I have a pre-made one that I was trying to find, and that way it's the right color background. I made it easier to read. I just have to find the darn thing. It's alphabetized, so in theory it should have been down here in the T's. If I called it TPO chart, but maybe I called it a monkey bar chart. That's the thing about being a little bit of a, I don't know, a little bit of a hoarder, I guess. There it is, monkey bars. So in here, we can see the volume profile on the left, and we can see the what we would call TPOs anywhere else. We can see the TPO chart on the right. Now, zooming in didn't really help, right? Because these are all letters. I'm going to zoom in a lot deeper in a moment. I cannot add indicators. You can see that's grayed out. And the chart time frame defaults at 30 minutes. That's where you're supposed to leave it. When I mentioned Jim Dalton earlier, these are the kind of charts that he uses. And these, in my opinion, are excellent look back tools. If I want to look at yesterday, last week, whatever, and analyze the price action from a previous day, this is a good tool to do that with. But trying to use these intraday to make a trade decision using today's footprint chart, I don't want to mess around with this because I don't find any value in that. So I'm going to zoom in. Thinkorswim uses numbers instead of letters. If I was on any other platform, these would be A, B, C, D, but instead they are 1, 2, 3, 4. It gets a little complicated. Jim Dalton did make a book on it. This is popular. There's great charting platforms that are much better than Thinkorswim. You'll notice that each one of these has a point of control. So the left side has a point of control on the volume, and the right side has a point of control on the TPO. Right? And so we can put those two together. We can look at the shape of the profile itself. We can look at the tail that's down here and the different names that are associated with the shape of the profiles. On TrendSpider, they have what they call raindrop charts, and it has this same logic built into it, but it's in the shape of a teardrop or a raindrop, and it's really unique, right? So I, yep, it has something very similar to this. I think it uses the ABCD though. I don't think it uses Thinkorswim's numbers, but yeah, it has TPO charts and footprint charts in TradeAvate. Absolutely. So does TradingView. A lot of places have those. They might be called different things. This is called monkey bars on Thinkorswim. Anybody who was looking for a TPO would have found that profile that we were using, and they would say, "This is not a TPO. Where's my TPO?" And they would never think to look for a monkey bar. Who would? Like, I don't even know where that name comes from. Monkey bar charts. What? That's silly. But that's what it's called. You've got range bars, monkey bars, tick charts, seasonality charts. There's all kinds of, you can make the charts candles volume based so that they're fatter or narrower based on how much volume made that candle versus whether price went up or down, right? There's so many things out there. There, oh, I think there are books out there that do that. There was a real popular trader psychologist. Damn if I can't remember his name, but he created all kinds of stuff like that. That would be that would be really cool. Yeah, that's a great idea. You know, there's all these gurus out there that will sell you a course on making money, right? And all they're doing is making money on you buying a course on how to make money. Here's the TPO profile description, and it really talks about how it's measuring, just like Marcidi said, how often that price touched, right? Distribution, how many times was it touched? Now, in TPO logic, I've always tried to find the easiest way to explain things to people. In my descriptions, and I've said this word for word, and my description doesn't change. When you look at a volume profile, consider it as how much trading volume we had there. And when you look at the TPO profile, how many trades we got there, right? And while that definition is not necessarily accurate, as I just showed, it is the easiest way to wrap your mind around what the hell am I looking at here? How many trades versus how much volume? And if you keep it in your mind like that, looking at these two combined are really helpful. But at the end of the day, when I want to evaluate price action, I really want to evaluate how these candles were made. And tools like this and TPO and footprint charts are an excellent way to dissect that old price action and get really relevant, useful knowledge for what if we go back to that zone? What can I anticipate or what should I expect? We don't have to do that, right? And believe me, I don't do it often. But if I see a range or a high or a low and I want to examine it in detail, I know that I have all of these tools at my disposal to be able to do that. And that's awesome. And I know I have them and I know how to use them. So that's something you could certainly put on the list in the future for rainy days or just days that you don't want to trade, that you scroll through your notes and say, what am I going to learn today? Because I'm not trading this crap. Oh, yeah. You know, I'm going to dig into this stuff again. Having those tools at your disposal, excellent. Just knowing that I have them makes me feel better, you know, even if I don't use them every day. Oh, yeah, absolutely. I love this pattern. I love this one. Every time I'm looking for a reversal, I'm so happy when it's this reversal because we don't get it all the time. But when I love it. It's higher conviction. On swing trades, the evening star and the morning star are really good, but that's for swings, right? You won't generally find them on futures because you need the gap. If you don't have the gap, then you don't honestly have a morning star or an evening star. And seeing the futures gap intraday, come on, you know what I mean? Like you don't get good intraday gaps on the futures. At least you shouldn't. But I like them. I like that morning star. If it's equities, if I'm looking at Google or Apple and I'm on a daily or a weekly, I'm looking for an evening star and a morning star reversal because I really like them. Yeah, unless anybody's got questions, I'd say we wrap it up, call it a day, and come back next week. Yeah, I'm definitely going to be riding that bike. Hugo, hold on. I just read this. Um, right on. If you're not on Thinkorswim and you're looking for a TPO chart like the one that I have in Thinkorswim, I'm hard pressed to tell you where you could find it anywhere else because I've not seen it as advertised. If I go to any other platform and type in TPO, what I get is nothing like the Thinkorswim's TPO, right? Well, what we get almost anywhere else would be some form of a volume profile chart or a some kind of footprint chart, and it doesn't resemble Thinkorswim's in any way at all. So unfortunately, I think it's just one of those rare indicators that, um, just like the market maker move, that you can only get on Thinkorswim. Yeah. Oh, you'll find it, but it won't be the one that Thinkorswim has. See, right there. Yeah. See that's nothing like Thinkorswim because Thinkorswim doesn't have that. It just has the volume profile. Yeah, absolutely. If you guys want to recreate the TPO chart from Thinkorswim into TradingView, I'm really interested to see what you would get. So here's the TPO profile. Here's the code. We'll just stick it in a text document and I'll throw it in the Discord. Absolutely. You know, it's easy to forget that we have all these amazing tools nowadays, which is sad because I'm telling people every day, like, what? You don't use AI? You need to use AI. What's wrong with you? And yet here I am not using AI. We could have already been doing this, or I should have already thought of it, but I have it, so I didn't think of it. All right, we're going to put that in this place so that I can find it and then share that in the Discord. All right, this is think back script for the TPO profile on TOS. All right, everybody. Have a good weekend. I'll see you all on Monday.